SEC to dismiss case. Now that's the good news, and I just want to be very clear, we are not talking about the SEC versus Ripple case. They're not ready to dismiss that one. Doesn't appear that they're ready to settle that one up yet either, but we're going to talk about the debt box case that they are now motioning to dismiss. A complete back down, retreat, and waving the white flag and surrender as the SEC has been completely embarrassed by the court. And we're going to get on into that. But before we do, what you see behind me is not what we want to see. And that would be some big red candles coming in for XRP, only down about 5-6% from the most recent highs at about 53 cents. We're going to take a look at those charts, but I wanted to make a quick announcement before we get into it. This morning, I uploaded a video, and I appreciate those of you guys that subscribe, hit the notification bell so you don't miss any of my updates. But it took me a while here to realize that I uploaded the same video that I dropped last night where I was talking about Biden, declaring war, making actions happen on the military front. I accidentally dropped that same video this morning instead of dropping the ripple effects from Evergrande video that's going to be airing tonight. Okay, so I've taken that video down from this morning, and tonight at 6 p.m. Pacific, 9 p.m. Eastern, I'm going to premiere the ripple effects from Evergrande video, talking about Evergrande, the impact that's going to be felt in our broader economy and our real estate market. Important update. So once again, that's going to be dropping tonight at 6 p.m. Pacific, 9 p.m. Eastern. Hope to see you there. And my apologies for dropping the same video twice on you guys. I didn't mean to do that. But with that being said, we got to get right on into this, guys. We have some action taking place while the market's kind of just hanging out sideways out of the blue. As you can see behind me, not what we want to see. Or if we're looking to take advantage of it, we can scoop it up. It is XRP back at about that 51 cent range. I'm going to show you guys the charts here in 1 minute, but I did want to just interject my kind of speculation, what I think is maybe happening right here, which is a final, call it a dump, call it whatever you want. It's definitely not a crash. I mean, let's not get dramatic with it, right? Maybe a little bit of a pullback here before we start to maybe run up off of this AMM. Now, I want to be very clear. This isn't sending us to $100 tomorrow when the AMM goes live. They still have to vote it. We have to reach 80% consensus. They have to hold that consensus for 2 weeks. And then the AMM goes live. But I think that just off of the hype, the speculation, everything that's going to be surrounding this new utility, this DeFi that's coming to the XRP ledger, finally, we're giving our developers and our builders some more tools to build with. It's a beautiful thing. And I do have a feeling that we might see a little bit of a run up in price. So I'm wondering if on the chart behind me, this is kind of a final pullback, correction, cleaning out before we start to move up. We'll see. Let me know in the comments down below what you guys think about this XRP correction and whether or not we're going to see the price go up in regards to this AMM going live. Now, with that being said, let's get right on into this update. I got a lot to cover. And let's take a look at our charts here to get started. I appreciate everyone for stopping by here today. So let's take a look at it. This is your XRP chart right here. Now, as you can see, XRP was up here at about 54 cents. It basically did a wick up to 54 cents, back down to 51,157 as I'm recording this. And like I said, this move is nothing terribly crazy, about 6% pullback overall, just within the last day. But what's interesting is out of the blue, and then honestly, I kind of like to see this, XRP moving outside of the rest of the market. You got to take the bad with the good. And I like to see XRP moving on its own, obviously not in this direction, but I'm wondering if this might be a final pullback before we send it with the AMM going live and everybody's starting to get excited about that. 43,500 for our Bitcoin. And I talked about how I was expecting a little bit of a run up in Bitcoin in the stock market leading into the FOMC meeting, which is taking place today and tomorrow, Wednesday, which is going to be the final day of January 31st. We're going to get that decision on the interest rates from the Fed tomorrow. And then I think that we will continue the correction after that. So this little run up for Bitcoin in the stock market was kind of my prediction leading into this week getting started. Now for Ethereum, it's back up to 2,377. So Ethereum catching a little bit of a pump today, right? XRP, big red candles bringing us back down. Don't like to see that. XLM, kind of the same thing, following along. And for Algorand, chopping sideways. XDC back down. If you want that 4.5 cent XDC, you got it. Red candles for Quant, bringing it back down to that 106 level. And for Solana, we've had a little bit of a run up here over the past week or so. And we're at 104 at the time of this recording. Now let's continue on, folks. We got a lot to cover, so let's take a look at this data point right here. This is my cause for concern. I would love to say that this is the beginning of the party, the bull run. We're all going to have a good time. And I do believe that we are entering that next bull run. But we have to clean some things out, and we're going to have to get this economy actually going again before we see this, before I feel comfortable with where we stand at today. Because we're looking at data points like this, the Federal Reserve Regional Manufacturing. This is a data point that's important to look at. And we are now at a level that is worse than the Great Financial Crisis. This is our Empire Fed Index for Manufacturing that is worse than the Great Financial Crisis. It is worse than what we saw in 2015, 2016. And the only time that we've really seen it worse in recent history was during the close down, shut down simulation events of 2020. So this is why I have cause for concern, one of the many data points actually, but the consumers don't seem to care because we're seeing this type of reporting coming out of MarketWatch. Consumer confidence climbs to 2-year high as inflation slows and economy keeps growing. Apparently, we still got room to throw it on the credit card, and U.S. Consumer Confidence Index rises to 114.8 in January from 108. So they are still going shopping. The consumer still hanging in there, very strong. But I think that what we have is a situation where many people think that, they're never going to have to pay up. Buy now, pay later, not even being tracked. Consumers thinking that the Fed has achieved a soft landing mistakenly. And maybe it's going to be a fatal mistake that they believe that everything's going to be fine, rosy, rainbows shining, and good times will be had by all. I don't believe that to be the case. And in fact, I do believe that the chickens are going to come home to roost. And we got some serious issues to deal with. And I mean that. Had to get my little joke in. Even though this is no laughing matter. Texas chicken farms are going up in flames. Multiple chicken farms has been set ablaze in the past 24 hours. Some of the largest chicken farms in the United States producing hundreds of millions of eggs per year. Accusations of domestic terrorism are flying. No cause has been officially announced for the series of farm fires. This is a situation that we continue to see with many food processing plants been under attack. Our electrical grid, our critical infrastructure for our utilities has been under attack. Trains getting derailed. We have seen domestic terrorism spike. I've watched many reports. We've seen many reports and studies being put out on this. The rise in domestic terrorism, eco-terrorism. And for whatever reason, we've seen food processing plants, we've seen chicken farms, and it's all a joke until we can't feed our family. And we're going to once again see this all feeds back into supply chain. It all feeds back into inflation. And it's all fun and games until we're paying $10 for a dozen of eggs. Which, look at where the prices have gone. They've kind of dropped off here recently. From where they were, but the highs, over the last couple of years, we saw eggs spike to $4 or $5 a dozen. If you want good, what do they call it? Pasture raised, cage free eggs, you're paying a pretty penny for those, right? $4 or $5 a dozen. But we love to watch the headlines come across the screen that make us feel warm and fuzzy inside, and we get to celebrate and cheerlead and act as if everything's a-okay. Not what we do. We see and we read and we find the devil's always in the details. But once again, we get the Case-Shiller Home Price Index today, which tracks the sale price of existing homes. It does not include new homes. It's only 20 cities that track this data point. But this data point is presenting U.S. home prices hitting a new high in November. Let's take a look at it from MarketWatch. Another critical data point on our economy and our real estate reset. November's year-over-year gain saw the largest growth in the U.S. home prices in 2023. This is a lagging data point as this is coming out from November. So month over month, the index only rose 0.1%, but overall, the year over year is 5.4%, ending in November. Lagging data point, very important to understand that. Data point that only picks up 20 major US metros. Data point that doesn't include new homes. Now, prices were up 8.2% in Detroit, with the biggest year-over-year home price gains in November for Detroit. So like we've been saying, some of these markets still going up. And when you look at this data point of existing homes definitely are. The most of the pressure bringing homes down is coming from all this new home construction. And the one city that did see home prices fall in November was Portland, okay? Down 0.7%. But what's important to note in this is very important right here. The median price of a resale home was $302,000 in December. Now, this is what's being tracked in this. Existing homes is what is in the Case-Shiller index, right? Doesn't include newly built homes. But let's compare. Resale homes at $382,000 compared to newly built homes coming down to $413,000. This is where that pressure is coming in that's going to be bringing down the price on those existing homes. As the new, why wouldn't you pay, an additional, what is that? That difference is about just under 30,000, right? Yeah, we're just under about 30,000, between 382,000 for resale homes and 413,000 for, for new homes. Sorry, I mixed that up, right? 382,000 for existing, 413 for new. It's about 30,000 difference, right? So we're talking about getting right in that same range, that same ballpark, which why would you buy an existing home with all the issues, many times deferred maintenance, right? You're buying somebody else's headache when you could just go buy the new construction. Now, the devil's in the details. When you go send in a home inspector to go look at that new construction, you might be thinking that you're getting a new home with no issues, and you might be buying yourself a headache with the new construction quality that we're seeing get put out these days. Now, I speak more on this in the episode that's going to be dropping tonight in the ripple effects from Evergrande, because I talk about Evergrande, how that's expanding out to impacting our economy and impacting our real estate market as well. Evergrande having $300 billion worth of assets that are going to be liquidated. So the ripple effects are going to be spreading. Many people thought it was a nothing burger. This is coming back home here to the United States. And on top of that, you're seeing that we're already going through a real estate reset. The full update's going to be dropping tonight, 6 p.m. Pacific, 9 p.m. Eastern. Another data point on rents. Fresh data on month-over-month rent growth coming in at negative 0.3% nationally, kicking off the year with the sixth straight monthly decline. National median rent is now down 3.5% in total since last August. So rents are going down. This is more pressure on the investors, right? And with the amount of new home and with the amount of new apartments being completed, more pressure is coming on the way. So once again, this is our opportunity. If you're looking to buy or if you're looking to even rent, that you finally are now in a position to have a little bit of a leverage and a little bit of room to negotiate your rent. We're seeing cities like Nashville where apartments are offering 3 or 4 months rent free to move in. And so this is something to watch very closely. I did want to share this data point right here, though, which is right here. Even still, rents are up 20% compared to 3 years ago. So even though rents are coming down, even though the real estate reset is underway, we're still, relatively speaking, from where we were just 3 years ago, still 20% higher. So there's still some room to correct further. We'll have to watch that one very closely. Now, one thing that we've been watching, and this has just been consistent throughout the last couple years, that I've actually been watching this closely. I know some of you guys in the metal space have been watching this much longer than me, but the vaults continue to get cleaned out, with the COMEX vault dropping 1.2 million ounces today. It just continues. It is nonstop. If you guys are looking to get metals, you know where to find it. We have our affiliates at my website, zachrector.com. Roll over a 401k retirement account or get the metal shipped directly to you. We can get both done. And hey, I'm not here to tell anybody what to do. It's very clear what the institutional money's doing, and it's very clear what the central banks are doing. That's all I'm going to say. And like I said, all of our community resources are at my website, zachrector.com. Now, as we titled this episode, folks, this is why we are staying in the fight. This is why we continue to apply pressure. This is why we will not give up. Is because the SEC is finally getting put back in their place. They are giving in, raising the white flag, surrendering in shame, as they should be. And this is truly incredible, folks. With Eleanor Terra on the scoop, the SEC has just filed a brief in the debt box case. Now, I really, really do wish that this was the SEC dismissing the Ripple case. This is not that same case. So sorry for those of you that thought that it was. That's why at the start of the video, I made it very clear this is not SEC versus Ripple. This is a different case. But the point still stands. We are defeating the SEC in the U.S. court of law, and God willing, we will get this level playing field, and all we ever wanted was fair rules of the road. But the SEC has just filed a brief in the debt box case saying that it intends to dismiss the lawsuit against the company. The SEC is choosing dismissal rather than face possible sanctions from the judge for misleading the court in order to secure a restraining order and asset freeze against debt box. This is why I'm saying they are surrendering in complete shame. Given this ongoing review, the commission has determined that the best way to proceed is to dismiss this action without prejudice, which allows them to sue them again. Thus, this commission has authorized the filing of a motion to dismiss this action without prejudice, which will be forthcoming. And adding to this, the SEC has dismissed this case without prejudice, which theoretically leaves the door open for the agency to come back and file a new suit against Debtbox in the future. Expect a comment from the judge on that. Secondly, if a dismissal is accepted by the judge, it doesn't necessarily mean the agency escapes scot-free. The judge could choose to impose monetary sanctions on the agency for misleading the court. If we can only get so, and I want to say lucky, but really this is what rightfully should be done. They should be sanctioned. And this is, once again, they've been called arbitrary and capricious, obviously getting shut down on their appeals in the SEC versus Ripple case. Now in this debt box case, they were getting a warning from the judge that they were about to get sanctioned. And instead of getting sanctioned and continuing on, they're just saying, okay, we give up, we're done. We're just going to dismiss this case. Even after, right, they freeze, they issue a restraining order and asset freeze against the company. What happens to innocent till proven guilty? Not with the SEC. Not how these boys operate, right? They're going to come in, they're going to issue a restraining order, they're going to freeze all your assets, and they're going to make your life a living hell. And as we highlighted in the SEC versus Ripple case, they tried to go to Brad and Chris and intimidate them into signing a deal and settling, bending over and taking it from them like the thugs that they are. But Brad and Chris stood up. They signed a check for $200 million with Ripple to fight the SEC and put them back in their place. I'm very happy to see this in the debt box case, and I continue to cheerlead the fact that we are getting major victories in a U.S. court of law. Thank God we still have somewhat of a rule of law here in the U.S., and it is up to all of us to continue to get the word out that the SEC needs to be put in their place. We have multiple courts that are siding with us. It's not just us crazy XRP community members. No. And by the way, it's not just about that level playing field. You know we could go down that ETHgate rabbit hole, and you know that we've got the timeline that's not in dispute. You know we have the facts, the evidence, and now the whistleblower and Steven Narioff. Where's the mainstream media at? Where's the scoop on that one getting picked up by anybody in mainstream? Not even just mainstream financial news. What about mainstream crypto? Uh-oh. We can't go down that road, can we? Because Ethereum is a very critical pillar in what makes up the current crypto Ponzi scheme. You pull that one out, and it's a cataclysmic event for the crypto space. And the mainstream crypto shills won't dare go down that rabbit hole and bite the hand that feeds them. And that's just calling it like it is. And that's why you guys are here. So if you appreciate our updates, please make sure to smash that thumbs up for us. Like I said, we got the premiere coming in tonight at 9 p.m. Eastern. I will be in the chat watching that one with you guys. And everything else can be found on my website, zachrector.com. Greatly appreciate all of you guys. God bless.